Good morning, everybody. It is Tuesday, March 4th, and we are going to do our prep today for the ES. Were you ready for the down move yesterday? Did you know where the line in the sand was and what it meant if we broke that? That is what we're going to dive into today, as well as some other topics to get prepared for what's coming. And we've mentioned that that line in the sand is critical in the past, and we also have mentioned the election levels. So those are also topics we're going to cover today. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So when we look at our flows today, and then we'll dial back and look at what happened yesterday, our systematics are not participants between 5904 and 5817. So again, when they are not participants, we look for the market to have bigger range as there's less liquidity in the market. There's one less participant, so we can actually see bigger moves. We get to bigger risk tails at 58.16, which is about where we are now. And really, if we get down to 57.88, that is critical, as that is that election level on the futures at 57.92. That is also where we will bring $12 billion in selling into the market today. And we will be below the largest area that our market makers have in a $5 billion position at 58.10. So those three factors tell you that this 10 to 92.88 area is critical for today in either big downside or in holding to help propel us back up. Uh, on the upside, our line in the sand, our minor line in the sand is at 59.21. Our major one is at 59.68. And if we look at how that plays into our levels from this morning, we have rotational price action between 58.24 and 59.29. So right ahead, right over that line in the sand, that minor line in the sand there. And we also have a small offer here at 59.16. So those three things stack up at that upper end. Our pivot here is at 58.80, which happens to line up with Globex value area high. And again, right where our systematics go from about a $400 million bid to a $200 million offer. So that's a $600 million shift. But again, when we talk billions of dollars, 10, 12 billion, that's 600 million is a drop in the bucket. And our lower targets now, if we do break, are at 57.68, where at 76, we get our market makers flush with capital, and we'll review that as well today. And then we have on the downside 57.28, and this is where we will look for jump factors as well. If you're familiar with calculus, this is where the market will drastically change. And if you're following along on the VIX, we have had a breakout in volatility. And if you know how to utilize that, then be sure to pay close attention. On to the upside here. If we get over 59.29, as our market makers will have a lot of capital down here to deploy, then we have to watch our rotational zone. But to the upside, we're looking for that 59.87 and then 60.15 as the max high. And once we get over our line in the sand, again, we go into more risk compression, so things will change. And if we want to look back to what happened yesterday, we mentioned early on in the video that we were underinsured for the week. And we're still underinsured as we head into the data as the week goes. But you can see at 10 o'clock, we saw all of those go bid. And that's where we watched the VIX spike as well. But we watched all the insurance come in on a daily basis. Now, where we are today in this is we still haven't seen next week's rise. So again, people will wait, and we're still waiting on that last minute push to get us up into the red zone. That's what we're going to watch for today. At the end of the day for that ADP or during the day. Again, Trump is speaking as well today, so we'll watch what happens. Tariffs go into effect, so there's a lot of uncertainty right now. And that is what we need to pay attention to as we go into the markets this week is that uncertainty's rising. People are concerned. They're starting to buy insurance a little earlier. So now that's a change to what we've typically seen play out. And it isn't always what happens, but when it happens. And that is telling us now that we need to start looking for those insurance plays earlier in the day. Now, when we also look at our market makers and their structure, we're going to look back to two instances. So if we go back, this is what we watch for is our minor and major line in the sand, and then where the market makers are fully invested and we're looking to sell, or where they are fully loaded with cash and looking to buy. And so we watch this as it goes on throughout the day. This is, again, custom proprietary indicator that we have, but we can overlay it onto our charts and know these key turning points. We can see where when we get to where they're fully invested, we sell down the market. Then we chopped between our two lines in the sand. Once we broke our minor line in the sand here on the 21st, again, now we're below both, and that risk absorbing mode creates the more directional, faster price action. And we came right down to where we know they would buy. That's what we laid out on the weekend video. Now let's see how that played out yesterday. We posted on our room before the open that the line in the sand had moved down drastically. We posted this at 8 a.m., that it had gone from 60.36 down to 6,004. So instantly at the open now, we know that we are likely going to stay between these two. And notice where we held right on that low at 10 o'clock. Came right down, then we bounced. Now, once we break that, now we have both segments telling us faster, quicker, cleaner downside. And we came right to where we knew our market makers were flush with capital. And then we rallied 60 points off of that. So if you're going into the market blind and unaware where these flows are coming in, then it's time to level up your game. You can check out our Discord where you can ask us questions. You can check out our courses if you want to learn to do this yourself and have access to these tools real time, and not just for the ES, but for the NASDAQ, for the Russell, for the Dow, for commodities. We have these for all. And then for the NVIDIA and Tesla, we have these for anything that you would want to trade. And you can learn to do this on your own. If these videos help you, you can continue to watch them and learn to apply the principles. But if you do want to learn to do this yourself, we do have courses starting in the next couple of weeks, and then we won't have any until the fall. So with that, guys, remember to control your risks today. We will be putting out another video as well to give you a macro perspective of what's going on and to revisit some things from our last macro video the last couple of weeks as we come into big data this week. Big catalyst the next actually 2 to 3 weeks as we have an FOMC meeting. And that, again, is something we need to pay attention to in our markets. So stay safe trading out there and have a great day, everybody.